draw a valid trend line. Yeah, how to draw a valid trend line. And we are going through this trend line trading strategy book. So yeah, let's move forward. I believe you guys have gone over the video and practiced by yourself on how to draw a valid trend line. So now let's get back here. Your Now let's do revision. It says here that before you get into the rules of trendline trading strategy, you need to build a good foundation of understanding how this trading strategy works. Number one says this includes how to draw a valid trend line. So I believe I talked about that. We'll see. I'm still going to read about it in the PDF. The next one is when is a trend line still valid and when does it become invalid? Everything is on the PDF and it's going to be explained in detail. So what I'm doing for you guys is helping you break it down on the chart so that you understand perfectly. Because there's one thing to see something on book and for it to be done live. So that's the difference. That's where it comes in. So the next one is understanding some common mistakes in drawing trend line. The fourth one is how to know which trend lines are most likely to hold and which ones will not. The fifth one, support and resistance, and how to use them to your advantage. For those who don't know, support is a level where you take a buy trade from. That's where buyers come into the market. Resistance is where sellers come into the market. We are going to be learning about those two. Number 6 is understanding trends and knowing when they may be starting or ending. I believe I talked about it during the trend when I was talking about market trends. Knowing the market trend and using your trend line as a support, navigate. Trend line literally means a line to help you support your trend. So that's what you're doing. Like I said, you must first understand perfectly the way the market moves, what trend it is currently in. That's what will help you, understand how to perfectly use a trend line. And the last one, technical analysis. The best way to analyze your charts without too many indicators. Matter of fact, you don't need any indicators at all, but just price. That's true. Indicators can be used to help you, you know, support, tell you the direction. But basically, I feel personally that it's only disrupts you from, seeing the charts clearly, price clearly. Adding too many confluences fucks up with what you want to do, where you're looking at the market is heading to. So that's it. So, and it goes on to say, having a good understanding of the points listed above is very essential for the successful application of the trend line trading strategy. So let's go back to it. We talked about how to draw valid trend lines. How to draw valid trend lines. There are two types of trend lines, upward and downward trend line. And how do you draw a trend line? Easy, simple step. Identify obvious peaks and troughs. That's step 1. Step 2A, connect a minimum of 2 peaks or highs with a line from left to right, and you have a downward trend line. So left to right, let me go on my trading view and show you guys. Guys, it will call a good, let's take it together. So you get a clear understanding of it. Charts. We have our charts. We have our what? We have our watch lists. It's difficult to use on the MacBook. Wow, never knew getting a MacBook would be this difficult to look through. Okay, I think I've got it. GBP USD. That's what we're currently on right now. And back to it. So we go on I'm just type it on. Yeah. So this is the 4-hour time frame right here. We have now If we go back to the PDF, what does it say here? It says connect a minimum of two peaks highs with a line from the left to your right, and you have a downward trend line. So this is what the meaning to your right. It is moving line to themselves right here. That's the downward trend line. Now back here, it says connect a minimum of two troughs or lows with a line, and you have an upward trend line. Now let's connect that to a low point going high and goes high. Now you just drawn a trend line. So understanding how trend line works is one thing, and knowing the other confluence is another. And I'll see a very cool example of it. Let me zoom this in. It says how to draw trend lines. How to draw trend lines. You can see it says identify obvious peaks or trough. Obvious peaks are highs, meaning peak when it's something that is peak is high. So this peak like this is a high point. It's circled here. Another circle, the circled blue. So those are highs in the market. Then troughs are the ones that lose. So now how do you draw a downward trend line? You connect the first blue that you can see my arrow on to the next blue, and you have a downward trend line. The other blue and the other one, you have a downward trend line. Moving on, how to draw trend lines. Upward trend line, you connect two troughs. Now, the first illustration showed that the troughs are from down, that's from below, that's two lows to each other. So now this trough here is the low, the next one is the next low. So now two troughs have been connected to each other. Now, what you have to understand that you have to understand how this stuff you're seeing are showing red and blue and sorry, red and green, what they are called candlesticks. So, like I sent you guys in the previous candlestick Bible, once you understand how this candlestick, how they open, what they mean totally, you will now understand that some little shadows that are on the candle body are called wicks. So you plot your trend line on wicks. On wicks, that's where you plot your trend line. So you have to learn that. So go over the candlestick Bible if you have not. So the next one is key points you need to know. When you draw trend lines, they would usually fall into the outer line and inner. They will usually fall into the outer trend and inner trend line. That means they are outside trend line and they are inner trend line. So you can plot trend line on any time frame. That's what they mean. Now, the outer trend line usually the main trend lines drawn from much significant place or trough, and they are quite obvious in the larger time frame, like 1 hour and 4 hour time frames, and upward, like the daily. From 1 hour upward, we have what we call the outer trend line. So the outer trend lines are from 1 hour to 4 hours upward. It's best you guys jot this down as I explain, because it's better like that. It makes you remember. You understand? It makes you remember so you can go over it and on your own time learn it. Now the inner trend line are drawn within or inside the outer trend line and are generally used when you switch to smaller time frame like the 30 minutes, the 15 minutes, and so on and so forth. You tend to get a lot of inner trend line. These peaks and troughs that are used to draw inner trend line are sometimes quite difficult to spot if you are in a larger time frame, like the 4 hour and the daily. But when you switch to the 1 hour time frame and 30 minutes, 1 hour, the 30 minutes and 15 minutes, you can be able to draw your inner trend lines. So that's what it is. So from 30 minutes down to your 5 minutes time frame, you have your what? Your inner trend lines. So now look at it. Outer trend line is the one on the 4 hour. In this illustration that they are giving here, is the one on the 4 hour with the blue marks. Now the inner trend line is the one they are indicating in this slide here. Let me show you signing here. So that's why it's showing me this ad reload up because I got a new laptop, a new PC I'm currently using. So all my stuff I've not been logged into it yet. And that's what I've been working on. As you can see, it's currently on the 4 hour time frame, right above. Look at my arrow right here. We're currently on the 4 hour time frame. So what we do now, the outer trend lines are the one plotted that are obvious to see. So we can see this trough here to the next trough. Then this HP software I'm currently using is slow as hell. Let me pick out my trend. You can see it. I've plotted one. Let me take out my trend line, plot another outer trend line. So outer trend lines are plotted on frames and above. Let's go to the 1 hour time frame. This 1 hour, this one Asian those time take us to the 1 hour. Can we see here? It is on the wick of the candle. So now these are called outer trend lines that are plotted on the outer time frame. So if we go on the 30 minutes time frame, we are going to see a market structure that where you can plot an inner trend line. This structure here that I'm indicating here, let's lose. Those are called troughs. So once you get a trough like that, yeah, that's when you'll be able to plot it. So take us down to the 30 minutes time frame. So now we are currently on the 30 minutes time frame. Let me show you the structure. You see me, I just circled right now. You see, look at this layer. If you join the trend line to this other layer, you can see that it's connected. So now the inner trend lines are used to connect market structure on the lower time frame. That's what it talks about right there. So everything I'm explaining to you guys. So that's how you draw it on the chart. Now it says this is how simply it is to draw trend lines. Trend lines are very easy to use. Like most easiest trading strategy I've come across. That's not complicated. You understand? So now they said the next one. Now for most beginners, the confusion begins when they look at the chart and see too many lows and highs, and they just cannot figure out which two they are going to use to draw a trend line. The solution to this problem comes down to prioritizing which lows or highs to use. And the general rule is this. Now, let's read it together. For lows, the one with more higher candlesticks on its left and right will be more significant than the ones with lesser candlesticks on its left and right. And it works for highs, except that it is completely opposite. You will be looking for lower candles, meaning that candles that are going low. The chart below make this concept a lot clearer. These are significant lows on the chart, number 1, 2, and 3. Notice that on each of these lows, there are more higher candlesticks on both the left and right side of the low. Now let's look at this illustration again, what we look together. Let's look at it. Let me zoom it more. So now look at this black chart you're looking at right now. It says the low with more higher candles on its left and right will be more significant than the one with lesser candles on its left and right. Now look at this left here. Because it fell down and created the low, it is, what did he say? The low with more higher candles on his left and right will be more significant than the ones with less ones. So now look at this first left here, number 1. This is number 1 illustration. The first left here, there's candlestick there. On the right, there's candlestick. The next one left, candlestick, right, candlestick, left, candlestick, right, candlestick. So the one that's more significant is the one you have to choose. In other words, you look for highs and lows that are easy to spot. Let me explain further. When you select 2 highs for drawing down one trend line, or the 2 lows for drawing up a trend line, they must be visible or obvious to everyone else. They should not be ambiguity. Everyone else must be able to see or spot them clearly. Now, let me show you what they mean by that in the chat. Now, look at this. Oh, I have to reload this again. I've really got to sign in my account to this. My MacBook is making this stuff like hard to use. I had no idea using Windows software would be this slow and disadvantageous. So 4 hours. Now, what did they mean by that? Look at it. Look, I just zoomed it now. Now, this is this point here. This point here like this is the what? Oh no, this thing is not working. And it's frustrating. This stuff not working. The software is slow. How do I get it this slow? Okay, should work now. We're good. This now is the left-hand side. So this, what they mean by that is that when drawing trend lines here, the candles that are coming from the left should be like plenty. Why? Because it will make your trend line more significant. Do you understand? It will make it more significant. Now see, when price was moving from this low points here that the trend line started at, right? When it moved up in the right direction, you can see that the move was much, right? But price still, created a high and low, created another high and another low. Let me show you guys. So this points here you're seeing is called where you take your tools from. So okay, don't click to finish part. Let me delete that part so I just should let me withdraw it. So from this low point here, price went up, it created a high. Abi? It came down, created the low, went up, created a high. Again and again, so on and so forth. Now, we're currently on an uptrend because we know that an uptrend price keeps creating highs, what? Highs and lows. Okay, let me adjust this back. So, this point adjustment appears to come from this up point here and go back down. So now let's talk about these 2 points I just circled. So this is coming from the left, yeah? This is going to the right. You can see that the candles coming from the left side was much. The one going to the right side, when it created this first high here, I'm going to indicate, when it created this first high here, the candles that was coming from this side, from the left side, going down, they were not much. So the trend line cannot be plotted here. It has to be plotted at a significant point where price is much. Like where there's a huge that was coming from this point, this high that was plotted, when it was coming down, the candles were much. You can see when it got there, there was a trend line there. That's a point where it indicated a trend line. So that's what it means. So and so on and so forth. That's why you use your trend line. So moving on, it says when you select two heights for drawing downward trend line or the two lows for drawing upward trend line, they must be visible or obvious to everyone else. There should be no ambiguity. Everyone else must be able to see or spot them clearly. And if two lows or heights can be clearly seen and identified, that means that they are significant because this is where the market has been observed to reverse significantly. Now, it shows us another illustration below. It says here, on the chart below, how many visible or obvious and therefore significant lows can you find? Can you show me can you show me which lows are obvious and significant? Now look at these lows. What can we see? Before we go to the next passage, we can see four lows. 1, 2, 3, 4. If you can see another one inside here, another one inside here, and so on. But these ones are inside. If you plot the trend line and it crosses the body of the trend line to the next body, it is invalid. But if you plot it from this low here, this one that my arrow is, to the next one that my arrow is on, the next one, and the next one, you can see that it is clear and significant. Now, let's go to the illustration, what I just said. So you get the R. So there you have it. And this is what you get when you draw an upward trend line connecting the first two lows on the third and the fourth when price came back down to test the trend line. You could have entered long with very low risk and made a nice profit of the trade. See now, you can't lose. Yeah, the loss that was significant, you call for a trend line to be valid. Then you extend it. You can see this point 3 and point 4 bounced off. Here's another one. Notice on the chart below, the lows are obvious and therefore easy to spot, significant, and the result is you get a nice upward bounce when price came down, tested the trend line that was drawn. So now let's see that. Look, the two lows. This is the first low, this second low. First low and second low was just to connect the trend line. They are obvious low. When you extend it, the third touch, you buy. Now that's the rule of a trend line. So I'm going to do you guys a favor. I'm going to send you this PDF directly to the group. Then you guys can go and finish everything on this course, on this PDF, because as I've explained it now, once you really read the PDF and gone through the videos I've helped you guys do, you will be able to understand the trend line perfectly, because I have to start moving into other parts of the strategy like support and resistance, how to use Fibonacci, and so on and so forth. So after tonight's class, you guys will have to go on your own time and read by yourself. Trading is about studying. So now this is another example. A downward trend line is drawn when you connect a minimum of 2 peaks or highs. Peaks can be called highs as shown below. Notice that the peak or highs are obvious, and you can see it here, this chart. You can see the peak one and peak two. Once you connect it, the two what's it called? Two highs together, you extend it. You can see this point where they say sell. So now that is it. So now this should clear any confusion about deciding which you chart illustration. Let me clear these charts. First of all, I have to reload this page again because I've not logged in my account to it yet. Then yeah. All right, good. I think it's loaded. So let me go on the lower part. Clear structures and more loose to be identified. Now let's look at this together. So let me pick up my trend line. So on this left-hand side of the chart is where you see your tools. So this first point here, once you do a trading view like this, you come to your left-hand side, you select these things you can see on my chart. So you can take screenshots and go back on your own time to use these tools because this is what you're going to be using. So you're going to favorite your trend line. You're going to favorite your horizontal line and horizontal ray because they're going to be used to draw your support and resistance. You're going to come to the next section. You're going to see Fibonacci retracement. You're going to favorite it too. You're going to come down. You're going to see your long position. I'm going to see your short position. The long position is used to you know, how do I put it? It's used to set your stop loss and take profits. If you want to enter a buy trade, goes for the short position too. So it's an opposite of what you're doing with the long position. The short position is used to set your stop loss, your entry price, and your take profits when you're looking to take a sell trade. So when you hear shorts, it is buy. When you hear long, when you hear shorts, sorry for that. When you hear shorts, it's sell. When you hear long, it is to buy. So now we have the part two. You have to select that too. You can use the triangle. I can use it as also support and resistance on your trading view. So now let's go back to this trend line. So let's plot up trend. We can see several lows. Let me use this ellipse tool. You can favorite this tool so I can draw obvious ellipse tool that I'm drawing. You can see a low. The first low that was created that is out is this one. You can see this low. Can also see this low, Abby, like that. Now take out your trend. This you have to understand this stuff just have a break and retest into a trend line. So now this trend line that I just plotted right now, it is not a clean trend line because of you guys that are just learning trend line newly are not experienced when using trend line. So this is not a clean trend line in your own understanding. But this trend line that I just plotted now, to me, it is clean and clear because I understand market structure. I understand that. See, let me see this first point here. Let me clear it out. Let me clear it out. At this point here, again. So this point here was the first low, right? And another low was again. Take it all over again. Once you read the trendline trading strategy PDF, your low was created. Another low was created here. So once you start using this stuff in your chart to understand what I'm saying. So now when you trade it, you can see that what the price do. Price came back, respected that trend line on this. Oh my God. I think I can use this thing for a few, you know, to start the game. But those stuff I saved, the stuff I favorited, you guys should go on your own time and favorite it also on your chart. I'm also going to do a separate class on how to use the trading view platform. On how to use the trading view platform. Okay, it actually favorited itself, which is good. Which is good. So you guys can see it all over again. So now, like I said, this low right here below was the low that was first created. Stuff is slow, truly slow. Uh, yeah, there's gonna have to bear with me. So I'm doing the best I can right now with this HP software. I'll try to fix something better in the next class. I just want you guys to understand that trend lines and how they work. And you go on your own to learn everything in your own time. But you need to know you need to see it done on the charts know the before you understand what's even on the PDF. So this is the first low, second low, yeah. Then I pull out my trend line. I extend it. You can see what did it do? When price got there in the future, it tested it like this and it bounced right off. It came back again, tested it, it bounced a little and it broke. So now let's count this. This is point A, point B, point C, point D. So 1, 2, 3, and 4. On the fourth touch of the trend line, price tends to become invalid. So that's just the rule of a trend line. That's just the rule of a trend line. Now I'm giving the main rule you need to know how to use trend line. Now you have to go what the PDF says, everything teaches you there, practicing it all over again, you'll be able to understand perfectly. So now on the fourth touch right here that we can see, price broke up out from it. And when it broke out like this, after it broke, I came back into it, went up, created a high, then came back later in the future to retest it. That's why I said you beginners using a trend line can't understand why I said it is a valid trend line unless you've started to use it. Kind of this line I just plotted is a valid trend line. But for beginners and people newbies to using trend line, you just have to like start by using, what do we call it? By using obvious troughs or peaks to use when talking about all this stuff, because those are what's common. Peaks or troughs are just foreign names. So now this is the obvious low here. If we connect it to each other, 1, 2, boom, you've done a valid trend line. So when price comes back down in the future, let's say from this high here, price comes back down in the future, test it like this. You see, when it tests it at this point, you see a candlestick confirmation that is telling it wants to go back up. That's when you take a buy trade. Now, we just use the path to draw this long position. So now the long position is what you're going to use to like buy trade and vice versa. So go on your own and practice. So that's what it is. Go on your own and practice. So now see it here. It says question. But I also noticed that many great trade setups occur on trend line drawn from insignificant lows or highs, or from combination of both significant and insignificant lows. What can you say about that? If you are a beginner, to avoid the confusion, stick to only drawing trend lines based on significant high or lows. As you gain more experience and confidence, you can start trading off trend lines drawn on insignificant lows or highs, or combination of insignificant and significant lows or highs. I just explained it to you. I showed you a clean illustration, because trading is practice and trading is experience and it's understanding. Because I understand the insignificance and the significance because of series use of that particular strategy and backtesting. Now I get it. So once you're starting off using the trend line strategy to begin with, you just use a significant ones. So you're confident about the direction of the market and when it's headed. A minute. Okay, good. So the charts, let's look at the chart below together. The chart below shows an example of this situation. Yeah, look at the significant lows now. They illustrated it for us. They use an arrow, the significant peak, the significant high. That's one you can see clearly. But now there's an other significant peak, a significant high that's there, that a trend line is connected to. He drew it from there and connected the trend line also there. He connected the trend line also there. Understand? Connected the trend line also there. So it says here, trend line drawn using insignificant peaks give a very good short trade opportunities here, which actually turned out to become a significant peak. You understand? So you can draw significant peaks, insignificant ones, but starting off, just practice with significant ones. So now this trend line drawn from insignificant peaks or trough are simply inner trend lines. So you can use insignificant peaks, or you can call them insignificant trend lines that can be drawn inside. Meaning insignificant trend lines can be used to catch short-term trades. So now look at what it says here. See, it does take a bit of practice and skill to be able to draw inner trend lines when it comes to picking which 2 points to use. The more you practice, the more you'll be able to do this easily. What I just said, training is practice, practice, practice. It's not an easy journey, but it's fulfilling. It's a career path. So you have to choose by your own self. You want to continue or do you want to stop where you are right now? It's your choice. They don't force anyone to trade honestly. You have to love it and have the passion for it, or you're going to drop it eventually. That is my realization from 1 year plus of trading in forex market. So let's move on to the next. Valid and invalid trend line. A trend line is valid as long as it is not intercepted significantly and price continues to obey it. What do they mean by that? You see now, let me reload this page again. When price breaks a trend line, that is when it is invalid. That's what happened on that trend line that I just showed you guys. I said the inner trend line was used, then he broke it and he came back again to retest it. Okay, it's loading. Once it get loading, I'm going to show you guys what I was talking about. So right here, what can we see? Now, starting from this low, I draw my trend line and I extend it. Okay, good. Popped up. So when is in this case scenario, that price has invalidated the trend line on the fourth touch, and you see that I break. Just understand that that trend line is no more valid. Now, there's two things that can happen here. As price broke it, we could have retested it like this, touch it here, give us a bearish signal that it's on. That's what we call a break and a retest. Choose favorited here. All these things favorited. Why is it showing like this? Double click. Okay, good. Break and retests. Retests. Break and retest moves in the opposite direction of the trend line of the trend, comes back to test the trend line at this point, sells. Or in this case, breaks the trend line like this, goes up, line again in the future. Now, when price breaks this trend line, I guess in this point, until you see a retest, either downward, like a break like this, coming valid, except you get the retest, or you break into it again, you break from it like this, like I just showed you guys, and comes back again to use that same trend line in the future before it is valid once more. So those things you have to understand. So now I say a trend line becomes invalid when it is intercepted significantly. And this could mean that the trend is now probably changed. Like I just told you guys, you see, as I'm explaining it, is what it is written here. So this stuff you have to like experience it to understand it. So it says here, how can you tell if a trend line is intercepted significantly, which could mean a trend line breakout or not? There's no exact formula to determine that, but here are the three things I look out for. The candlestick, is it closed above or below it? Now you have to understand candlesticks. The length of the body of the candlestick, if it is long or short, that closed above or below it, and the close of the 1 hour or 4 hour candlesticks. So this stuff, I'll try and do one more, trend line strategy video class rather, to explain it to you guys so you can like really grasp it. You understand? Because you need to understand how to use the trend line perfectly. That's why I decided to take my time out, go through the PDF shortly with you guys. You guys will go on your own. From what I've explained, you go read, now you go and experience it. Simple. I believe we learned something today. Go back to my previous videos, watch everything I've talked about foreign exchange over again, and keep practicing, keep having a note where you journal. Journaling means keeping records of information, because information is what you're coming into. It's a market of information. Once you have information and you can use that information to your advantage, you make money. So have a good night. See you guys in the next class. Let me stop recording.